Okay, so if you are tuned in right now, I'm guessing 3 things about you. Number 1, you are a Forex trader. Number 2, you've blown your account. That is, you've lost insane amounts of money. And number 3, you have lost the opportunity to make insane amounts of money. That is, you have exited trades too early and missed out on amazing profits. If you fit into any of these categories, well, welcome. In today's video, I'm going to be showing you how to effectively manage your trades such that you don't make unnecessary losses, thereby losing so much money, and you don't miss out on the opportunity to make a lot of money by getting out of the market too early. So stay tuned. It's going to be a very exciting and informative video. Now, before we go on, I want to invite you to subscribe to this channel if you are new here. If you are an old subscriber, thank you for joining once again, and make sure you destroy the like button, because doing so helps the YouTube algorithm put the video in front of more people who might need information like this. So please do that. Destroy the like button, smash the subscribe button, and let's jump right into the video for today. So today I'll be taking you through a couple of trade management techniques that essentially should help you save and make so much money on the Forex market. We all know that the Forex market is the biggest market out there. Over $3 trillion traded on it daily. Most of this money traded is actually lost by a lot of people like you and I who may not necessarily know much about trade management. When I got into Forex for the first time, there were so many bloopers I made, so many pitfalls I got into because there were these elementary things I didn't know, and I don't want any of you to get into any of those troubles. And so this video is to teach you exactly what to do to manage a trade once you have entered, such that if the market reverses on you, you don't make any loss, and if the market goes into more profit, you don't lose on the opportunity to make so much more. So the first trade management technique that is going to be very helpful to you is to move your stop loss to break even, or move your stop loss to entry price. This is a very necessary thing you have to do anytime you are managing a trade. Essentially, what happens is before you get into a trade, once you have set the price for buying or selling, you are definitely going to set your stop loss and your take profit. And normally a 1:3 risk to reward ratio is recommended. If you cannot get a trade that will give you a 1:3 risk to reward ratio, you should abandon it and look for the next opportunity. Okay, so usually the stop loss is set based on certain considerations. One of these most crucial considerations is structural levels. So you usually set your stop loss a little pips below or above a structural level where you know that the market cannot break that structure. Once it breaks that structure, you know that your trade has become invalid. So you have your stop loss, you have your take profit, and then you have the entry price for either going long or going short on the market. Now, the most important thing you should do in managing your trade is to move stop loss to break even or stop loss to entry price once you are in profit. But it doesn't mean that when you are 20 pips in profit, 10 pips in profit, you begin to move your stop loss about, because that is not advisable. The market may take you out prematurely and then you lose out on the opportunity to make incredible gains. This is how you must go about it. You know, the market moves in levels. It respects structures and it respects zones. The way to move your stop loss to break even is to watch the market. Anytime a key structural level is broken in the direction of your take profit level, you move your stop loss to break even or your stop loss to entry price, so that you are then running the trade risk free. This is important because should the market suddenly reverse, it means it is going to break that structural level. And more often than not, when it breaks that structural level, against the direction you have predicted, it means that the trade has become invalid. So once it's broken it to become invalid, it will hit your entry price and take you out at break even. That is why we call it moving stop loss to break even. So you wouldn't have lost anything in the market, okay? It's very important to know this. Anytime the market breaks a key structural level, I'll try to put something on the screen so that you understand exactly what I'm talking about. But let's assume you have gone long on a trade, okay? And the pair is moving from your entry price upwards. It means you are running in a bit of profit. You need to study the chart and look for the immediate past key level, okay? Key structural level or key structural zone. keep out for it and watch when the market breaks that zone, such that that zone no longer becomes resistance but now becomes support. Okay, you need to watch out, and once that zone is broken from resistance to now support, you can then move your stop loss to entry price. It's very simple. In the same way, if you have gone short on a position, that is, you have sold a particular pair, you need to watch the market for when a support zone or a support level is broken for it to become resistance. Once that zone or structure is broken, then you have to move your stop loss to break even, so that if there's a sudden unexpected reversal, you are not taken out of the market in a loss. You understand? Another way to go about this, or another important thing you must consider concerning this point, is anytime you move your stop loss to break even or entry price, you must do it a few pips above the entry price or below the entry price, whichever it is, if you've gone long or you've gone short. This is because if you are in a swing trade or you are keeping a trade for a number of days, weeks, months, probably years, what is going to happen is the broker is going to charge you for those open trades, and the charges will accumulate. If after 5 days the market suddenly reverses on you, what that means is that because of the broker charges, even though you are taken out at break even, you will still make some loss. The loss being from the charges the broker will take from you for keeping your trades open. So it's important that you keep the new stop loss, which has now been moved to the entry price, about 5-10 pips above. Maybe 10 is too much, but 5 pips above the entry price, so that you are protected from a sudden reversal and then from broker charges. The next important thing to do in managing your trade is to lock partial profit. Now, this is a very exciting concept. As I said earlier, there are times when, even though you have studied and analyzed the chart and know that the market is moving a particular direction, it can suddenly reverse on you and then everything goes invalid, okay? And this happens because the market is actually unpredictable. There are so many unpredictable forces controlling the market. So you cannot know for 100% certainty exactly where the market intends to go. At best, you can know with a 95% or 90% probability where the market is going to go. So the idea of locking partial profit helps you take advantage of certain profits that you would lose if you just allow the market to do as it pleases, and in the unfortunate turn of events, it decides to take you out. There are two ways to go about locking partial profits. The first way is to open a trade multiple times. So if you have decided to go long or short on a particular pair, you open that exact pair or trade maybe 2 or 3 times. And what you do is you set different take profit levels for each of them. So you should have your long-term take profit level, which will apply to one of them, the medium-term take profit level, which will apply to the second one, and then the short-term take profit level that will apply to the third one. This is very important. The way to set these take profit levels, depending on the strategy you are using, but one way of doing it is to use the key structural levels that I spoke about in the first point. Look out for those key zones where structure is going to be broken, moving towards your eventual take profit level. And you can set each take profit level at those various structures, okay? Or depending on what other strategy you are using, you can find a way to set all those different take profit levels. What that means is that as the market progresses, wherever it reaches in regard to all of these stages, you are still going to make some money from the market, okay? So that if there's a sudden reversal, you just didn't waste your time entering the market, okay? Even though you move stop loss to break even and you know that you are protected, you're not going to lose any money, you will still not have wasted your time because you are still going to make something from the market. It's very, very important to lock partial profits this way. The second way to lock partial profits is actually very easy. It's a bit complicated, but once you have grasped it, it's very easy. The way to go about it is to close your trade by reducing the lot size. It's very easy. So what you have to do is, if you are in a running trade, maybe you open the position with 0.50 lots. The thing you have to do is to press close trade, okay? And once you have hit it, you then reduce the lot size. You realize that as you reduce the lot size, the amount that you can lock as profit also reduces. This happens because you are taking partial profit and leaving the rest to run. So once you have reduced the lot size and you close the trade, it will close with that partial profit, that partial lot that you have closed, and keep the rest running. It's a very easy concept to grasp. I'm sure that there is some demonstration on the screen right now. I'll know when I'm editing, but then it's very simple, very basic, and you can do it and make money for yourself. Avoid, getting out of the market without having made anything. So the second most important thing to do in managing your trades, take partial profits. Now, the third most important tip for trade management is to know when to get out of a losing trade. A lot of us have been through the experience where a trade is going bad and we are still waiting for it to hit stop loss because we think it will miraculously move and then go our direction. As I mentioned before, stop loss is set based on certain considerations. One of the most important ones being structural level. So you set your stop loss a little bit beneath a structural level that you know will not be broken. Now, the way you know that you have to get out of a losing trade is if the structural level is broken. So if this particular level is broken, then you know that you have to exit the trade. You don't need to wait for the trade to hit the stop loss and take you out with more losses. No, once that level is broken, it is recommended that you exit the trade graciously. Okay, be a gracious loser and save yourself the loss of more funds. It's a very important concept that will save you so much money. Okay guys, thank you so much for watching today's video. These have been my 3 most important steps of managing your trades to reduce loss and to maximize profit. I would like to leave you with an interesting quote a friend said to me. You know that in Ghana, galamsey is a bit illegal. There's a lot of debate, but you cannot mine gold without permits and all of that. And I have this Forex trader friend who said to me one day, if he cannot do galamsey, he will do galamsey on the market. He trades a lot in gold, so he will mine his gold on the market. I don't know, it struck me. I don't know how it has, entered you. I don't know the sort of feeling you have about it or how it has impacted you. But when I heard it for the first time, it was just so impactful, and I thought I might share it with you, my cherished subscribers. So you guys out there, if there's something blocking your hustle, blocking your chance to make money, be it galamsey, be it some other hustle you are into, don't worry at all. The market and the internet in general provides amazing alternatives for you to make as much money as you would have made doing that particular hustle. So don't fret at all. Learn all these things and let's make money together. I'll see you again in my next video. Peace out.